learned several things about this wonderful man. He's one of the founding fathers of the euro. Some of you know that. I did not. He's also recognized as one of the world's leading economists. We're glad to have him here today to talk to us. Please help me welcome Mr. Tomasso Padoa-Schioppa.
Good morning. Thank you very much for inviting me to speak to you today. You are certainly familiar with the origin of the often pronounced sentence, "Nobody's perfect." It comes from an old movie of Billy Wilder, in which Marilyn Monroe and Tony Curtis play the role of two girlfriends. Tony Curtis, in fact, is disguised as a charming girl to escape, I don't know what kind of thing. Marilyn Monroe doesn't know that he's a man, although in the end she discovers that. At some point, Tony Curtis, as an attractive girl, goes under the intense courtship of an aged man who is more and more pressing, and he is very embarrassed and tries to escape this courtship, and at the crucial moment he discloses all his shortcomings, and the end says, "But I am a man." And the old man says with a very indulgent tone, "Nobody's perfect," and continues his courtship. When I was having breakfast this morning, Linda identified me. We had a short conversation about my presentation here. I told her a few things about myself, including that I'm not, in fact, an accountant. And exactly in the same tone as this aged man had with Tony Curtis, she said, "I know you are an economist," meaning nobody's perfect. So I will disappoint you if you expect from me the remarks of an expert in accounting. In fact, I think I have been twice chosen to chair what initially was the ISC Board of Trustees. Now the institution has changed its name. It's called IFRS Foundation, to chair the Board of Trustees, probably because I'm not an accountant. What I have heard from those who made the search was that accounting standards are too important a thing to be left to accountants. My predecessor as chair of the trustees, first time, was Paul Volcker, who is also not an accountant, and who, like him, I am, in fact, I've been almost for all my life a central banker. So I took the chair in end of 2005, but few months later, in 2006, I was invited to become finance minister in my country, so I resigned from the institution. I served as minister for 2 years, and I left in 2008, but just some months ago, I was approached again to take up the chair of the trustees of IFRS again, and it is in this capacity that I'm speaking to you today. Linda suggested that my remarks could span from some considerations about the crisis, the financial crisis, to the accounting standards implications of the crisis, but I will also devote a little time to giving you the picture of what I see to be the key challenges that the IFRS Foundation is meeting. I don't know how familiar you are with the IFRS Foundation. It was created 10 years ago. It was created on an institutional model that is the one of the FAF and FASB in the United States, namely as an organization that is primarily stemming from the private sector, which is established as an independent non-profit corporation managed by a board of trustees, financed now in the United States. The financing of FAS and FASB is provided by dispositions set by the Sarbanes-Oxley, but it remains basically a privately funded institution, so is the IFRS Foundation. It is, the standards are set by a board of 15 persons from around the world, broad geographical representation, working full-time, based in London, and appointed by the trustees, which are 22, again from all countries of the world. The trustees are in charge of broadly overseeing, directing, ensuring financing, protecting the independence, selecting the members of the IASB. I will tell you more about this in a minute, but this is the institution which I'm chairing now. So let me briefly say a few things about the financial crisis. We are in the 4th year of the financial crisis. It would be a form of minimalism to call it today the subprime crisis, also this was the origin. It may not even be adequate to call it a financial crisis, because it's also an economic and maybe increasingly a social crisis. It started, but you find almost no trace of the start, when the upward trend of prices of real estate in the United States came to an end. That was end of 2006. There were similar housing price bubbles which had inflated in other countries, in some European countries like Ireland, Spain, the Netherlands, the UK, not France, not Italy, not Germany. This trend reversal set in motion a deep, wide movement of the earth, which is what we call the, what we initially called the subprime crisis, what we call now the financial crisis. I see it as a combination of 3 different movements of the earth composing a kind of seism. A more superficial movement was the financial panic that first occurred in the summer of 2007, when the interbank market got completely blocked, and both the Federal Reserve and the ECB had to make huge injections of liquidity to compensate for the fact that the existing liquidity did not circulate any longer. There was underneath this another movement of the earth, which was the bursting of the housing bubble. And in my view, deeper, still deeper, there was a third phenomenon, which is only partly financial, which was the growth model of some economies, certainly of the US economy, but also some European economies, in which growth was primarily based on debt incurred to sustain consumption. In the particular way in which this did occur was the debt incurred out of the increases in values of the houses, largely used to finance a high or higher level of living standards based largely on consumption, larger of consumption of durable goods, with the idea that savings and wealth were no longer requiring any special effort by an ordinary household because the increase in value of the house was in itself granting an increase in wealth out of which more consumption could be sustained. So this was the almost complete coming to an end of the habit of savings in the private sector, and an equivalent process was taking place in the public sector with the increase in the federal deficit in the United States. These two deficits together, by a simple accounting rule, add up to the external deficit, and in fact the external deficit of the United States was one of the big imbalances in the global economy that grew over time in the years preceding the crisis. Matching this external debt was the external surplus of primarily of Asian economies, exporting low-priced manufactured goods to the industrial world and sustaining this high level of consumption in a context of low inflation, precisely because those manufactured goods being produced by countries where labor cost was very low kept prices stable in the importing countries. So the very large amount of liquidity that was created by monetary policy in those years did not result in inflation, because inflation was kept low by the process I just described, nor did it meet any difficulty in financing, because the dollar is a much sought denomination for international reserves, and the exporting countries were quite willing to accumulate dollar-denominated reserves. So the two key elements of monetary discipline, which is domestically an inflation process triggered by an excess of money, and internationally a discipline triggered by the reluctance of the creditor to extend further credit to an indebted country, failed to operate and facilitated a prolongation of this course that was judged unsustainable by most observers. If you read the communiques of the G7 of all those years, you find repeatedly the word that this course was not sustainable. It was not sustainable, but it was sustained by very long until the day of reckoning came. And the day of reckoning came when the bubble of the housing sector burst. There had been previous bubbles, there had been a debate on bubbles. You know probably the positions that the then chairman of the Fed, Alan Greenspan, had on bubbles, namely that monetary policy could not really recognize them in advance, could only try to manage the bursting as carefully as possible. It is the combination of these three movements of the earth which made the crisis. Each of these three elements is known by the economic literature, can be managed, but the combination of the three and the fact that the bubble was concerning a particular asset, namely the house, which is socially so important, which is so widespread among the families of the middle class, made the process of the bursting so dramatic. My view of the crisis is that just as it results from the combination of these three dynamics, it is originated by three deep factors. The first being the belief that became stronger and stronger over the years preceding the crisis that financial markets are efficient and capable of pricing assets correctly at every moment of time, always moving in the direction of equilibrium. This belief led to increasing retreat of financial regulation, because financial regulation is based on the idea that markets are naturally unstable. If the theory prevails that markets are efficient and hence naturally stable, no regulation, no tight regulation is necessary. The second deep factor is the increasing gap between what I would call the perimeter of the market and the perimeter of policy or public action. The economy and the financial markets became global, their perimeter became the planet, but policies remained national. So if one believes that a market needs a framework of public rules and policies in order to function properly, clearly in a situation in which there is only one market, but there are global market, but there are about 200 sovereign countries, or countries which declare themselves sovereign. They are about 200 which are affiliated to the IMF and to the World Bank. And even if you take the biggest one, they are by now more than half a dozen. Clearly, the scope for public action as a complement to the freedom of the market tends to be lost. And third factor, more difficult to pin down, is what I would call short-termism, namely the sense that time horizons of most manifestation of life, consumption decisions of the households, trading decisions by the traders, investment decisions by the investors, policy decisions by governments, tend to have a shorter and shorter time horizon, in a way compelled by the events. If a trader is convinced that the market is going in the wrong direction, but it's convinced also that it will continue to go in the wrong direction for another week or two, it would lose money by investing on the quote-unquote right price. It has to guess what the market believes rather than what the equilibrium price is. These three deep causes are those that should be addressed, in my view, in reforms to draw lessons from the crisis. Now, what does accounting have to do with all that? What is stated is that in no way can one say that accounting rules were responsible for the crisis. And I think this is absolutely correct statement. The accounting rules are about measuring, and one should not be angry to the thermometer when fever mounts. So attempts that are made by certain quarters around the world to blame on the accounting, I think, have to be rejected very strongly. In the meantime, I think that those who deal with accounting issues, like you and myself, have to ask themselves if anything is to be learned from the crisis, even in their own field. It may well be that, and it is in my view indeed the case, that the crisis was not originated by accounting rules. It doesn't mean that the crisis means nothing for accountants and standard setters. And in fact, it means a number of things. One thing that it means is that an extremely stronger attention by public authorities on accounting rules exists today compared to the pre-crisis period. If you read the communiques of the G20, you see paragraphs devoted to accounting rules, which were completely inexistent before 2007, 2008. So here you have the heads of states, the President of the United States, the Prime Minister of the UK, taking a view on accounting rules. I mean, what an honor for you and for us, but clearly it represents a big change for the institutions which are dealing with these matters. A second meaning that the crisis has, in my view, for a standard setter has to do with the question whether the market is indeed, at each point of time, the best, provides the best evaluation of the value of a particular asset as the theory of efficient markets states. If markets are subject to periods of euphoria, to the development of bubbles which do not burst when they are still very small, but which can inflate for years and years, the upward trend of the housing prices lasted for more than a decade. All the statistics, long-term statistics of the housing prices made it very clear that at some point the increase in those prices was far above the historical trend. If the market is not is no longer to be seen as the best evaluator of the value of an asset, what are the implications for accounting standards? There is no alternative measure, but in the meantime, we know that this measure is less credible than we hoped, and that financial statements based on this measure may retain their validity for a much shorter period than we thought before. If we have financial statements drawn twice a year, it may well be that the snapshot taken on the assets that are valued to provide a financial statement in a particular point of time give you a picture that makes that financial statement valid in the moment in which it is issued, but perhaps much less valid 1 week, 2 weeks, 1 month, 2 months afterwards, when in the meantime prices have moved and possibly moved significantly. So all these things bring the question of what are the best accounting standards back to the attention of standard setters, not only to the attention of policymakers. But there are also threats because the temptation, I don't know if it is strong in the United States, it is certainly strong in other parts of the world. Nobody was complaining when the financial statements were showing great prosperity while the upward trend of prices was underway. But there is great reluctance to proceed with the impairments and the reduction in values when the trend is opposite. And here is where the temptation to break the thermometer, or at least to blame the thermometer, comes, which may mean pressures on standard setters, questioning the independence of standard setters, being tempted to make the measure itself something that is subject to the vagaries of cycle and convenience in a particular moment of time. Let me turn with this background to the IFRS Foundation and what we are doing. As I said, IFRS was created in the year 2000. The main figure behind this initiative was Paul Volcker. It was part of the initiatives taken in the aftermath of the Enron case and all the questionings and debates and urge to make reforms that were the outcome of the role that accounting mispractices had in that case. And the idea was, let's have a system of global accounting standards. The IFRS was created to try to make this dream of global accounting standards becoming a reality, considering that in a world in which capital moves freely across the world, investors are led to make their investment decision no longer confining them to a national range of alternatives, but to a global range of alternatives, and that comparability of financial statements was key to such decisions being made in a rational way. I saw this institution once at the end of 2005, beginning of 2006. I see it again now. The story of the IFRS is the story of a formidable success in the field of international cooperation in rule making in the financial field. I've been member and often chair of almost all the committees that operate in the world of global financial rules. I was chair of the Basel Committee, I was India IOSCO, I was chair of the Payment System Committees. The IASB is by far the most advanced and successful experience in international rulemaking because it has produced a body of rules which is complete, precise, detailed, high quality, and last but not least, adopted by about 100 countries in the world. The first quality of a standard is to be a standard. If you have the best handset of the most advanced technology, but you cannot call anyone on the phone because everyone else uses another handset, possibly of a less good technology, but which is the one thanks to which people talk to each other, your best standard has a fundamental drawback of not being a standard. You know that VHS in television was not the best standard. It became the world standard for some reasons, very often mysterious. So a standard needs to be high quality, but it's part of its set of quality to be widely adopted. And today, the IFRS, they are high quality and they are widely adopted. They are adopted by Europe, by China, by Japan, by India, which means they are adopted today by about 2/3 of the capitalization of the global capitalization of corporations, in spite of not being adopted in the United States, which accounted for more than half of total capitalization 5 or 10 years ago, but now account for about 1/3. So an astonishing success, and in the meantime, a success that is at stake or is coming to a decisive test in the next 12 months or 18 months, which may either crown this success or possibly start a kind of unwinding of what has been built up over so many years. And so let me conclude by just mentioning what I see as the 3 big challenges facing our institution today. And I think that your profession has a close interest in perceiving accurately what these challenges are, particularly for and in the United States. The first challenge is adoption. The second challenge is governance. And the third challenge is quality. Adoption. The United States, the SEC, will decide in 2011 whether or not to adopt IFRS. It's an SEC decision which will be based also on the process of convergence between FASB and the IASB on narrowing the differences between the IFRS and the US GAAP, but it is an independent decision of the SEC. I was in the United States last week. I met Secretary Geithner, an old-time personal friend of mine, Mary Shapiro, Jack Brennan. We discussed extensively this decision. What is important to realize here is that adoption is a very different concept than convergence. To converge, it takes 2 to converge, just as it takes 2 to tango, as people say. Adoption means moving from 2 to 1. The fact is that if we are in a mode of convergence, it's much more than two. There can be European standards, American standards, Chinese standards, Indian standards, and they could converge, but the world in which the formula to come to terms with a global capital market was convergence, let me be very frank, would be completely unmanageable. Because a process of multi-parties mutual recognition of different standards is extremely costly for global corporations and technically extremely difficult to manage in a unitary way. It doesn't mean that if the SEC decides next year for adoption will happen right away. It would be very costly and unnecessary. It means that a strategic decision is taken, possibly a timetable is set, a gradual process is started, which for instance could allow the largest corporations to opt for the IFRS, but it would give ample time to the accounting profession, to the FASB, which would continue to play a crucial role to phase in the transition over a period of several years in which changes would have to occur anyway. So in fact, there would be no extra cost to make the transition from one system to another, because this cost would be equivalent and possibly inferior to the cost of the adaptation that the accounting rules undergo and would undergo anyway. In fact, in my view, the cost would be inferior because there would be much more certainty about the path that it is to be followed. I think that the debate in the United States on adoption will become more and more focused. I know I've read some of your own positions in your annual report, in the position of your president. I understand the reservations that some of you express, but I would urge to take a closer look at the process whereby IFRS are produced, which is extremely transparent, involves very wide consultation, and leads to those standards to be used by extremely sophisticated institutions around the world. In the meantime, the concern that some of you may have on the independence of this process brings me to the second challenge, which is the challenge of governance. There is no standard setting body as independent as the IASB. In fact, many people, including in the United States, are concerned about insufficient accountability of the IASB. Now, if there is insufficient accountability, something I don't believe, it means that there is so much independence that there is not even a body to which refer. Some of the recent and rather sudden changes in direction that the FASB had to take were indeed the result of strong political debates and even political pressures, which is something that the IASB, in spite of some utterances by some of those who have an interest in the field, de facto is not subject to. The fact that some of the standards of the IASB were not adopted by the Europeans, the carve-out decision of with which you may be familiar that was taken by the EU, is an indirect demonstration of the fact that the standards are not really made the way the Europeans, which are the constituency that has decided to make the IASB its own standard setter without any intermediation of any local standard setting body, has very limited or inexistent influence on the standards. That said, in a world in which the heads of states have a word to say on accounting standards, the review of the governance of the IFRS Foundation may lead to some ways to ensure better accountability while preserving independence. I discussed that with Mary Shapiro last week. Mary Shapiro is part of a monitoring board that oversees the activity of the IFRS, and she agrees that the governance will have to be improved. And finally, the quality. The quality is more, in my view, an internal debate to standard setters. It brings me back to what I said earlier, namely, are there any lessons to be drawn from the crisis, given that the crisis has revealed the limits of the ability of the market to price correctly assets at each point of time. This debate is underway within FASB, within the IASB. It's partly a debate on how wide should be the application of fair value. It's, I think, a quite legitimate debate which raises very complex technical issues and which I think should be followed with great care. The outcome is not easily predictable. IASB and FASB are working to increase convergence of the respective standards. FASB is in the process of collecting feedbacks on an exposure draft on fair value. We will see what their decisions are going to be. I've spoken more than I intended. I apologize for that. I can take one or two questions, but I think I will have to leave afterwards. I hope that I gave you a sense of what are the issues I'm dealing with as chair of the trustees of the IFRS Foundation. Thank you very much. Yes.
When you had your, thank you very much for your presentation. Very, very enlightening and helpful to all of us, especially me. When you had your conversations with Chairman Shapiro, Jack Brennan, the FAF chair, I believe you mentioned as well, and others, was there any discussion about the U.S.'s current study that Jack Brennan is looking after of private company accounting standards, and whether or not the interaction of IFRS with the U.S. private company standards was an issue that was on the table, that was being discussed?
Yes, he made me quite an interesting presentation of the accounting standards and problems for private companies. You have to consider that the universe of private companies is much larger in the United States than elsewhere in the world, and that this issue in this respect is a relatively specific or particularly acute issue in the United States. We did not discuss what convergence and then adoption of the IFRS towards and of the IFRS would, what the implications would be for private companies. So I know this issue is clearly on their agenda. I stated my disposition to consider it together in order to remove possible obstacles to an acceptance of a process leading to adoption, but I could not be more specific than that.
Okay, thank you.
Maybe one more.
Yes, a quick question.
Yes.
If you could elaborate on whether or not there is continued consideration, you had mentioned earlier about the establishing an independent and consistent source of funding for the IASB, what the conversation is currently, and if there's any ideas on the table that might establish a system similar to what the PCAOB has at the present time.
Establishing an
independent source of funding?
Oh, yeah. The IFRS began with a funding based on voluntary contributions by the Big Four and corporations, large corporations, induced to contribute to the funding by the trustees of the foundation in different parts of the world. Then things evolved, the base was broadened. In some countries, the funding was made automatic through laws, provisions, or agreements that asked the companies, the corporations, to provide a contribution more or less along the lines of the way in which FASB is funded in the United States. When I was minister in my country, I passed a law that provides a mechanism of this kind for Italian companies, but the system is very diversified. In the United States, in particular, in this moment, the contribution of the US to the funding of IFRS Foundation is below threshold, so to speak, partly because the standards are not adopted, although there is a strong US interest in the evolution of these standards. If the adoption was decided, some provision for the funding would have to be found. I don't know whether the model of Sarbanes-Oxley is a model that can be extended. I have no precise ideas. But let me just, by association of ideas, indicating that when I have to defend the IASB and the IFRS to a European audience rather than to an American audience like in this moment, I have to defend the fact that the standard setting body for the Europeans is one in which are sitting 4 or 5 very influential American members. The Europeans say, why should our rules be set by a body in which there are Americans who themselves do not adopt those rules in their own country? So the question of funding, the question of representation, the question of composition of the bodies and geographical are all in a kind of state of flux, which is based on the ambitious bet that in the end there will be global standards, which requires adoption by the United States, knowing that this bet has not yet been won. And clearly, if the bet is going to be won, as I hope, both the funding and the representation will be settled in a more, say, stable fashion than they are today. I have to apologize, but I think I have to avoid missing my train. So I thank you very much and wish you well and good continuation of your work. Thank you.